going to ask me why do I think this is a tree drive pattern. If we go back in history, since 2010, okay, sorry, 1 second. I don't think we are recording. Okay, we are recording. Okay, since 2010, we have been having both the upside and the downside in a nearly perfect tree drive patterns. The upside from 2010 to 2011, mid 2011, was in a tree drive pattern. This was the first leg of the tree drive pattern. This was the second leg. The second leg went all the way up to the 161.8 extension, and the third leg went to the 127.2 extension. Now, if we are repeating 2010, which I think we very may well be, we would expect not the 1272 extension to hold, which is last year's high, the 1.347s. We would expect the 161.8 extension at 1.386 to be the one holding. Now, this is the biggest reason why we decided not to short the 1.347, along with the fact that today is a Friday. I can see the euro dollar closing today well above 1.35. Now, I know a lot of people don't want to believe this, but the signs are all here. Now, let me just remove my current position so you can see it a bit clearer. Let me my trading history. Okay. Now, these two, I'm going to actually change the color of this. I'm going to change the color of this to orange, so it's a bit clearer. Actually, orange goes way too much with the Fibonacci's, so let's use pink. Or actually, it's not pink. That's like more like purple. Okay, guys. Now, these are the two scenarios in the tree drive patterns. Now, I want to make sure that everybody understands this. Now, the tree drive pattern is a very simple pattern. As I've said it before, Gartley patterns are just an extension of Ayla waves. Tree drive patterns are just leg 1, leg 2, leg 3, leg 4, and leg 5. Now, the thing that separates them from from normal Ayla waves is the symmetry. They require to be symmetric. When I mean symmetric, I mean that this rally has to be symmetric in time as with this rally. So if this rally was 2 months, you would expect this rally to be ending in 2 months. Now, assuming that this tree drive pattern is symmetric, you can see that if we take the time frame from over here to over here, something like that, let's assume that this is the rally timing, we are currently pretty much approaching the top the top of when the rally should be starting. However, if we are right, and this is the important part, if we are right with our assumption that the euro dollar is going to blow straight through last year's highs, the 1.386 mark can come very fast, just in time to do a perfect tree drive pattern. The second part of the tree drive pattern is that it's price symmetric. That means the extension of this leg, okay, not like that, sorry. That means that this leg, if this is leg 1, has to be the 100.27 or the 106.18 extension. So it has to either be here or either here. This is what it means, price and time symmetric. Now, the tree drive that we had from 2010 was perfectly symmetric in terms of timing. It was perfectly time symmetric. However, it was not perfectly price symmetric. We had the extension of the first wave to go all the way to the 161.8 extension. You would expect now that you would have expected that the third wave of this tree drive pattern to finish. Give me a second, guys. Just have to take a scalp. I'm just booking my scalp. Sorry. you would expect the tree drive to have finished the 1618 extension. However, it finished the 1.272 extension. That doesn't invalidate the pattern. That doesn't mean that the pattern wasn't perfect. It just means that it is taken upon observation. You always have the two levels, and you have to see what potential reversal zone is the zone to take. These are potential reversal zones. One of the two will be where it will reject almost certainly. So, in this case, we identified the first tree drive pattern. We are almost there. With the 102, actually, just one more thing. I want to cover the downside. The downside was a perfect tree drive, both in time and both in manner. This Fibonacci of the first leg down gave us the second leg, which was exactly the 102.72 extension, and then the third leg was also nearly perfectly at the 1272 extension, which gave a buy signal. Now, the biggest reason why I expect that we could be going straight to 1.386 is because I firmly believe we are repeating 2010. If we are repeating 2010, we would expect this level here not to serve as much of a resistance. That means that we would expect a move straight to 1.386. However, this of course needs to be validated. And the way that we are going to validate this thing is now. I'm going to move to the 1 hour time frame to explain this. Now, on the 1 hour time frame, we just hit a series of wonks hit targets. We had this large wonk, for those that can see it, this large wonk, this Fibonacci, drawn from 1.2658 to 1.3313, that traded at the 1.3 mark just before the start of this huge rally. Just hit target. Now, this target also aligned with the Draghi extension that we have been talking about for the whole week. This Draghi extension is the ECB anchor that took us all the way higher. It just hit its targets. It just hit its targets. So we have double wonks hit target just now, which is of course very good. Don't get me wrong. This is extremely good. This is like very good. However, now if if we are to expect further downside, we need to validate this downside, because at the current juncture it just looks like we're going to head higher. So we need to validate this further downside by breaking this support level. Now this support level is now the 1.3265. So while euro dollar remains above the 1.3265 level, we cannot validate this tree drive pattern as a valid pattern. We need to validate this tree drive pattern. And this is the reason why we are starting to assume that this tree drive pattern is going to go all the way up to here. Notice that if it goes all the way up here, this is the 161.8 extension, repetition of 2010. If it goes all the way there, if this is the first tree drive pattern, this is the second tree drive pattern. If it goes straight to 1.386, the 127.2 extension aligns just at this triangle top on the daily time frame, just like it did in 2010. That is why we continue to say it is very likely that we will be repeating 2010, because if we go straight to the 1.618 extension, the next leg of this bull move in this tree drive pattern is going to be right at this triangle top before a final downside, until I don't know when that's gonna happen, but this downside to complete the triangle and then all the way up to the 1.27 mark. That is probably in 5 years time frame, so that is going to take a very long while to actually occur. So on the hourly time frame, what you should be looking at now, if you are a bit more aggressive, if you think that the euro dollar is you know, like overbought and so on, all that good jazz, you know how it is, I'm going to cover what you should be looking at. Now, again, the shorts that we have outlined, they're very valid. I mean, that is also a halfway back short. Now, the thing that you should be worried about is this triangle completion. Now, this triangle is symmetrical triangle, nearly perfectly symmetrical triangle. Now, if this is a nearly perfectly symmetrical triangle, you would expect 2/3 of this move. This is 411 pips move. You would expect that the target of this move to be 2/3 of the triangle upon breaking. So 411 pips multiplied by 2/3 gives you 272 pips upon breaking the triangle. 274 pips actually. 274 pips are at the 1.368. So if this triangle is perfect, we have a lot of upside in front of us. So I would urge people not to short blindly here. You would want to see at least one micro measured move long fail. We have been holding a series of extension longs, taking us all the way up. This is the first. You can make a case actually just ready to target. You make a case that this here is not a break, I guess, if you are a bit more like, for example, I am not as conservative as, for example, Alexander, and I wouldn't consider this to be a break. So if you're not conservative, I would look for this anchor to finally fail. And until this anchor fails, we cannot validate any further downside in the euro dollar. We just cannot do it. It is just gambling. Keep in mind again, this is Friday. On Fridays we have seen 200-300 pip rallies out of nowhere. So I would urge everybody to be careful. There is also one more thing. We started this month with a wall in risk. Over here. Give me a second. We have started this month with a wall in risk. This is like the fourth. What was the fourth? The fourth was on a Friday. So we had the 4th of January mark the wall in risk, which was Friday. So it is very possible that this rally will extend for the whole of next week, and end Friday with a higher risk into February. Now, into February, specifically if we close next Friday with a new high in risk, we would look to start shorting the euro dollar. For now, we just cannot do so. While the euro dollar is above the 1.342 mark in the very immediate time frame, we cannot make any valid case for shorts, and we want to make sure everybody understands this. Euro dollar remains bullish until it is not. Now, back to the daily chart. Actually, this is a bit of an overcrowded chart, so I'm going to do it over here. Now, this is something very important that I have to outline, and I hope everybody will pay attention and everybody will understand it, and everybody will. Of course, we have these huge inverted head and shoulders on the weekly time frame. Targets of these inverted head and shoulders align with the 1.386s. As mentioned, by the way, as you can see, my limit order currently is at the 1.38 mark. So we could very well see a rally to 1.386, then retested the neckline for all the way halfway back long before we see a bigger pullback. Now, what I wanted to show you, let me remove this tip so they don't confuse people. Now, what we are against now is all the way halfway back short. From 2011 highs, we are all the way halfway back short the 50% 8 line. So if we assume that we go to 1.386 from here, it would do so to break this short level and validate further upside to at least 1.3 or to at least 1.4, 1.42. Now, this halfway back short, at least I would assume that it would be pretty strong, simply because it is both halfway back short and last year's high. It is both a halfway back short and last year's high. However, again, we need to validate this. We cannot validate this just yet. So that is for the euro dollar. I think I have covered quite a bit. In terms of the daily time frame, in terms of the most immediate time frame, I'm welcome to any questions now about what I have just said. Any questions about what I have just said? I see Dex typing. Yeah, guys, smoking will really kill me. How do I look for Wong entries within extensions? Now, perfectly speaking, when it comes, say, to the perfect way that you look at the strategy is you need a halfway back Wong that goes to target. Okay, I'm going to give you an example. Actually, this is probably the best example. Let's remove all these fips so they don't confuse people. Deck, we're going to do a very extensive webinar on the system once uh, the trial period is over. This is a halfway back wonk that goes to target, right deck. You can see how it held the 61.8 line to the pip, right? I would like just to confirm that you are understanding what I'm talking about. Okay. You can see that after reaching target, it started blowing through targets, right? You can see that this target did not prove a profit-taking zone, right? It just went straight up, right? I would again ask you to confirm. Okay, so once you start blowing through targets, you start drawing extensions from where the high of this halfway back long that held. So look at this. This is the halfway back long that held, right? And then you start drawing extensions because we start blowing. You take this high and you have one time this extension takes us to target, right? You see this? You draw it from this high because we started blowing through targets, right? Okay, I'm sure that is a very simple concept. So it goes once to target, then it trades another time. It goes again to target, and then we start a series of new extension. This extension traded two times to target, and after trading two times to target, it started blowing through. So we started a series of new extensions. Now, the series of new extensions need to be validated upon observation. This is the hard part within this system. Now, this is one time this extension. Extensions are simply Fibonacci's in an uptrend, for example, that are high to high. So we have this extension, trade once to target. We start a series of new extension. We see this observation, and upon seeing this as an observation that it trades, we validate it for the second move. So yes, this is price discovery. You have to see it trade at least one more time before you can take it. So when you see it the first time that it goes to target like here, you now validate this as a valid anchor, Then you can take this long on the next setup. It never retraded. We started a series of new extensions in the same fashion. They were validated. This is actually a bit awkward because what we held here was a halfway back wonk over here, and we started a series of extensions from this traditional. This went to target once, twice, three times, whatever, and then we started a series of extensions from here. We started an extension from here that traded once, to target, twice to target, and never retraded. And then we started a new series of extensions over here. We traded once to target, and I think it never retraded. Yes, it never retraded. Now, again, this is a bit complicated. This will take more than just a couple of words to be able to understand the deck. However, as we have said a couple of times, Alexander, because he's actually much better than me when it comes to explaining the strategy, this part of the strategy especially, he's going to cover this very thoroughly, and he's going to make sure that everybody gets it. Everybody gets it, you know? But Dek, did you at least understand a little bit what I'm talking about? Okay, I'm out of Coke. Thank you, Dek. We appreciate for your patience. I'm happy that you understood this. What I wanted to point out is not that I want to brag, but our Wong entry. I'm 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 very proud with this because we literally wall ticked the yen. We literally wall ticked the euro yen. All subscribers had this signal posted to them, and we are now. I have been scalping this upside, by the way. I have made maybe 200-300 pips from scalping this upside. No, this is not bottom picking. Now I'm going to explain why this is not bottom picking. Um, this is not bottom picking because we had a very valid long entry. I'm going to cover this now. Okay, guys. We just Alexander was just saying something. Never mind. Okay, guys. Now, how did we know this was a valid wonk? We had this halfway back wonk, and we also had this bullish bat. For those that can see it, I'm a bit tired of redrawing it as a valid entry to go long. It hit targets today. The targets were hit 400. Actually, I took profit before targets were hit. I took profit at 122 because honestly, even I am surprised by the aggressiveness of this rally. Uh, I'm not going to cover why this was a valid entry. Oh, again, we covered this yesterday. See webinar, which is posted on the website. We are going to unlock webinars after 4 days pass, so non-subscribers will be able to view the webinars from 4 days ago. Now, this was a valid entry. Now we are starting to slightly below 2 targets. Now that I'm going to stop bragging and just close my trading history. Now we have the potential to start extensions. The valid extension is this one, Deck. This goes back to your question. So now we potentially could have a valid extension wonk drawn from 120.73, anchor 120.73. This is the next daily wonk. This is the next daily wonk. If we fail this extension, we anticipate to trade all the way halfway back. If we fail this extension, we anticipate something like that to continue in a series of traditional measured move longs at 118.2s. So that is about the euro yen. Again, potential support at the 121.78. Potential support to the 121.78. Now let me. What was the second most desired instrument to check? I really can't remember at this point, but I believe it was the dollar franc. I'm going to check the dollar franc now. The dollar franc, very peculiar situation. I can make a case for a bit more downside. We held the 61.8 line of this traditional micro measured move along. However, and this is the however part, which everybody loves so much, if we go with this anchor, we traded a perfect 50. If we take this anchor, and to be quite frank, AB equals CD, A equals C as well. The A equals C wave is at the on 92.1 mark. So we could see some more downside. We could see some more downside, but what I would like to point out now, actually this is not too bad of an entry here. You can go long with a 40 pip stop loss, which is really not a big deal, especially because you know, like this potential swing long, and actually I'm going to take it now. I'm going to take it now. I have some pips to play with. I'm going to take this long entry here in real time. you are going to see me take this entry. So I'm taking this entry with 40 pips stop loss. Here I am long now, dollar franc. Just going to move my stop a little bit further down the road. I always have a standard error of 4 pips under the 61.8 mark. It should be, to be honest, 5 pips, but whatever. Now, I took this one. Now, why am I enough with the dollar franc? Because obviously this is a very small position. I took half a watt position just now. It is a very small position because the targets are 1,400 pips. The targets are to 104. This is 1,200 pips. Okay, 1,150 pips to be even more exact. These are the targets. That is why I'm taking such small leverage. I do not want to have a huge leverage on this position. I target over 1,000 pips, so I want to keep exposure minimum. The risk to reward is 40 to 1,150. So if we divide that, let's see what's the risk reward. I'm just making fun of myself, to be honest. So this is 28.75 to 1 risk to reward. I think it's worth a shot, right? Even with small leverage. So I usually don't take such big stop losses anyways. So regarding the dollar franc, I can certainly see a bit more downside, maybe retest of this decline. Now the thing I particularly like it is first the correction, the way that this correction is occurring. It is occurring in a perfect Elliott and Gartley perspective. And secondly, I'm liking it because if this is indeed an inverted head and shoulders, as we have identified it, and this is indeed a bullish fourth wave a bullish corrective triangle. It's not a fourth wave. I'm going to move to the daily chart. If this is a bullish triangle indeed, and this is an inverted head and shoulders, we are anticipating the bottom to be around here. I've had people telling me if I would be going long for the past couple of days, and I have continually said the same thing. I am waiting for a better price. Now the better price has come. I said that my minimum price where I would be a buyer would be the 1095s. Okay, we have that. Unfortunately, I missed to buy it some 30 pips lower, but I wasn't particularly paying attention to the franc, right? During that time, I was looking at the yen, so I can excuse myself. So yes, the first target is going to be the 0946. I'm going to book one half of this long there. I'm not going to be making this one riskless probably. So the first target is, let's see, from the entry is 360 pips higher from the entry. And then I'm going to offload one half there and so on. So the dollar franc, I like it, I love it, I love it. It has bullish inverted head and shoulders. It traded halfway back long. It went back as it should to retest its neckline, and now he has a pretty clean ABC, and AB equals CD correction. So I like it very much. I think that the chances are on my side. It is a good entry here with the 40 pip stop loss indeed, in my opinion, of course. Keep in mind that this is not investment advice, this is purely for educational purposes where we outline our strategy and how it provides valid entries that could be potentially profitable in the markets. Past performance is not indicative of future performance. Now, this is what I was talking about. This daily chart. Within the daily chart, we are holding a series of extension longs, wants to target. Actually, it just wants to. No, actually, I have the wrong extension. Excuse me. Okay, we have had this extension trade, wants to target, and now we are retrading the same extension, the same freaking extension. So if this is, and it looks like a perfect bullish wedge with a completely tethered wave triangle. Let me just remove this shit. Sorry. Again, about the language. I'm gonna get called with by Alexander about the language. If we are indeed now done with this wedge, which is also bullish shaded wave triangle. We are looking at the 104s. 104, that is 1,150 pips above us. 1,150 pips above us. So that is why I love the long. I like the wedge. I like everything about it, guys. I like the franc. I like the fact that I think that the euro franc is gonna go up. I think the euro franc is going to 1.3. I think that S&B is gonna have its hands forced now to do something extremely similar to what the BOJ did. So yeah, I like it, and even if I get stopped, that's 40 pips. It's not a big deal. We have booked so many pips today and yesterday, essentially this week, that I'm willing to take the risk here for such a great risk-reward trade. So that is for the dollar franc. For the euro franc, is a bit more tricky. We went long yesterday. Uh, we are holding. Okay, let me remove this. We are holding. Not this. We are holding this traditional measure move long within a larger wedge. Let me move to a 4-hour chart. Now 4-hour chart here. We are trading the halfway back long of what appears to be wave 3. Why do I think this is wave 3? 1, 2, 3, 4, 5, and this should be, the whole thing should be wave 3, and this should be wave 4. And because we know wave 4s have the tendency to be complex, this triangular correction could very well be the completion of wave 4. We need further information, of course, to validate this. Now, I am a bit worried when it comes to the micro time frame. First, why am I worried? I'm going to start one by one with things. I'm worried first because we are still holding and we are fighting participation from the measured move short. The measured move short from the high last week to the low this week is still holding the 61.98 line. That means that technically speaking, because this is not a validated level of support, we need to validate this level of support. This is not all the way halfway back long, all the way halfway back long, which is a valid entry of support, is at the 1.29s. So we need to validate this by breaking the 61.8 line. Тук с точки изпит. Така. Sorry guys. So we need to validate the support level now. What is a bit encouraging is that we're in a series of traditional micro measure move longs. We had a halfway back long trade yesterday. Unfortunately, I was a fool and I didn't take it. It went to target and it has retraded today. It retraded all the way halfway back long now. This means we have a battle over the trend. This means we have shorts participating and long participating. Now I absolutely know this is risky. I offloaded in the morning 30 pips or something like that. A bit, yeah, I think I took over here. I offloaded in the morning 30 pips. So now my net risk is 10 pips on this trade. My net risk is 10 pips. We have a battle over the trend and we have to see who's gonna win. If we go to the 1.25s, wonks will win and wonks have won. Now I see SK is typing, so I would like to see what he has to say. I don't look at those things. I see absolutely nothing about moving averages that actually matters. And I think I'm quite more profitable than people who trade on moving averages. Farnop, for you, mate. The buy level is here. The buy level is here. You can do it like this. You can buy here the micro and go with a very tight stop loss of this micro measure move wonk. That is like 13 pip stop loss. Or you can do it like me if you have profits to play with, because I do, and take a bit more risk and use the stop the 0.0919 level. SK, do you know what is the problem with moving averages? Now, I don't want to sound arrogant, don't get me wrong. Please do not assume I'm trying to sound arrogant. Uh, I don't like moving averages because they're an average, man. They are an average. They are just flattening of a curve. And I don't see how moving averages outside of, say, dead crosses, golden crosses, and so on have any relevance. They're a lagging freaking indicator. They're a lagging freaking indicator. I do not see them as important at all, mate. When I have my entries, uh, it, it's usually 100 pips lower than when it's where then. Yes, RSI is the only indicator I look at. RSI is the only indicator I look at, and I look at it mostly to validate area waves and occasionally to validate bullish and bearish divergences in a bit more complicated markets. We're going to cover that as well. For example, Alexander never looks at RSI. Well, I just like to draw trend lines on RSI, especially on the daily and the weekly time frame. They can be, let's say, particularly good. SK, again, please realize I do not want to sound arrogant. I just do not think that moving indicator, moving averages or whatever are of any relevance. I think that they're an they're an undeveloped way to trade, if you can place it like that. Occasionally, now I don't want to be lying, if the market turns really confusing, I could look at them, but generally there are only three things I trust in these markets. The first thing, and this is the most important thing, is price, and then the other two things are divergent from price. This is patterns. Patterns occur on specific price behavior, and the third thing is the general price action you see upon participation of levels. Those are the only three things I trust in this market. I don't trust fundamentals at all, by the way. So yeah, that's about it. So SK, again, I really don't want to be arrogant. I like it. The risk reward is really good. Of course, yes, you could be right. I mean, I could get stopped out. We have countermeasure move shorts taking us all the way down. However, I mean, you're not going to get a much better entry than this. I doubt that we are, say, going to break the 618 point line. This line here, the 092s, and just can go higher randomly. No, I don't think so. So I just like the pattern. I like the pattern. Could I be wrong? Of course. But it is a game of statistics. It is not about how right you are, how wrong you are. It is about how much you make when you are right and how much you make when you are wrong. And I think I'm good at making quite a bit when I'm right, and losing quite a little when I'm wrong. So yeah, I just want to show something on the Euro Yen. Euro Yen is trading, I think, an extension long, very aggressive one as well. Now, we showed you the larger daily buy that is around 100 pips lower. I think we are holding now. No, actually, we are holding an awkward halfway back long within an extension. So I don't know. This is getting tricky. I would expect to go a bit lower, but who knows? If this thing gets going, it can go much higher, even today. Lastly, I'm going to look at the dollar yen, and I'm going to leave the Aussie dollar, the pound dollar, and all that things to you. Now we booked our long for 220 pips today. We validated this long upon this head and shoulders entry with the bull flag and the extremely fractal nature of corrections. All the corrections, and I'm saying this probably for the 1 millionth time at this point. You can check this analysis on the website, because I'm a bit tired of repeating myself. It has occurred in the same way. Fractal, extremely fractal. We have 4 corrections that have occurred at the same time and led to new highs, with an inverted head and shoulders bottom, a correction that was a new high, sharp rejection, run two highs, failure just before the highs, and then a bull flag to the downside. So we validated this long entry upon the inverted head and shoulders at the bottom. We went long. We also held an extension long, which is important to show. We had this extension trade once to target, and we have it now trade twice to target. So we could have completed this up move in the dollar yen. If we have completed this up move in the dollar yen and we book 220 pips again, we would expect to go all the way down to the 89s pretty much. All the way down to the 89s. The way I'm looking at it, I'm expecting the next bull cycle in the yen to start next week on Wednesday. So what I think is we are going to have a marginal new high. We are going to have a marginal new high today or on Monday, and then we're going to have a correction in Asian trading, profit taking, and so on. Around two highs during Asia trading, and then a failure until Wednesday or Thursday. That is what I'm looking at. It's too little information at this point, however, to be 100% certain of. So that's about it when it comes to when it comes to the things that I want to cover. Now I would like to ask if somebody has any questions that they would like me to answer before I give you Alexander. Any questions you would like me to answer before I give you Alexander? I'm giving you exactly 2 minutes to ask anything you guys might want, and then I'm going to give you Alexander, who is going to cover gold, the Aussie, the pound, and any indices if so somebody wants. Well, since nobody has a question they would like to ask me. Oh, actually, SK. Yeah, that's going to be SK. That is going to be covered by Alex. We have outlined that the pound is extremely bearish. We have been bearish the pound for over 2 weeks now, and we have pretty much covered all the downside, how it has occurred, and you can go all the way back from through our briefings to see where we have outlined that. As I said, we are pretty transparent with what we do, especially with these webinars where you see us trading live. Now, I'm going to give you Alexander. Seems that nobody has any questions about the things I've covered. So, guys, I'm going to stop sharing. Thank you very much for listening to me. I hope you enjoy this. And Alexander is next. Чак само се справя микрофона. Когато си пускаш десктопа, не знам защо не мога да извадя това за аудиото. Чакай да се мютна. Не мога. Ей сега вече мога. Секунди. Пак не ми да. А не мога да се мютна сам. Яме мютни ти. Не ти излиза.
Oh, okay, guys, I think you can hear me now. First, welcome to the room. I'm really glad that you guys are attending. Although I see that we're missing a lot of subscribers, but George said tonight they stayed up late with him so they can track their Euro Yen. What you're currently seeing on your screens is a 15-minute chart of the British pound versus the dollar. The pound has been offered massively in the past week or so. What we established at first, let me just go back a bit. I've been repeating that every day this week, but we have some new people in the room, so might as well look at it. What we had first is full halfway back off the top, drawn from the 163.803 to lows over here at the 1.5989. This was the first entry. At that point, we were not sure that the pound was gonna roll over in such a manner. We were expecting that this short would not hold, due to the fact that everything on the market, everything else was bullish. But what happened was that it fell flat on its face, and after that, on observation, we had our first entry over here. As you can see, traded multiple times, and then it went to the downside. I'm not going to go into these micros. We've been covering them for a lot. Right now, what is going on the pound? Let me just get rid of Matthew. What is going on right now is we're still within an extension short in the pound. The first time we established this was with this anchor. Basically, the anchor is 159.54, and the first low we had was this one, the 15833. So we had our perfect test of the 50%. We sold down to target perfectly. So what you do in our strategy is just drag same anchor new low. Then you can see it retested. It retested 2 times over here. After that, it went down, came up again. It was bid up artificially due to the bid in the euro and other currencies. The retracement held almost perfectly, and we went down to target. What you see, the 5790 over here, it's not exact, but approximately, is our big support level in the pound. If you have a look at a daily chart, and if you draw a traditional measured move Fibonacci from your lows to highs in the pound. George just said that the euro yen just traded next in the series extension, I would presume. We'll have a look at it in a bit. So the pound traded again to target. To be honest, I would love to see right now, again, trading same anchor, new low. I would love to see this extension take us lower in the pound. I would not like to see a break of it because we're with a bearish bias on the pound for now. Seems it's being left out from the safe haven flows. On observation today, and I wanted to mention this in the morning webinar, but I didn't have time. I had too much things to run on my hands. On observation, you can see that if we take this low over here, doesn't matter which one you take, the pound is technically holding a traditional halfway back short, drawn from the 58921 with this low. It retested 2 times. You can redraw it. This is still, we have witnessed participation in this short. Although we're not very inclined to trust it, we can take it with this anchor. For now, it seems to be holding. If you take it with the lower anchor, with the lower low, you can see that we're holding the 50% perfectly right now. We have micro measured moves, which we have not been tracking, leading us up into the retest of this level. What we ultimately like to see is this not getting participated on anymore, although it got its participation, and maybe breaking away and seeing the same anchor, new low, bigger extension trade, as this is something that we're comfortable with doing. It's a level that you can trust. Of course, it's worth mentioning that we're on a very big support level in the pound. It's arguable that it's being retested because last time it traded, it was on a very big front run. As you can see, front run was massive. On a daily graph, it looks a bit different, but here it looks pretty big. So it's debatable. If we break shorts and go up, maybe we'll consider this traded, but for now, we're still in shorts. Pound looks to be offered heavily. We are seeing micro-measured moves moving away from support level. As you can see, we held the 61.8% line over here in the micro perfectly. And I think that if we redraw from this anchor, yeah, perfect trade, front run of 2 pips over here. So we'll see. I told you, I would not sell the pound myself here. I would look for the 58496. Actually, no, that's not correct. I would look for this anchor, this low, the 58553. Yeah, that's pretty much for the pound. Do you guys have any questions you want me to answer regarding the pound? Let me just get rid of this because it's getting on my nerves. Any question, guys? Come on. It's pretty straightforward. Deck is typing something. I'm gonna give you a sec, buddy. Oh, great stuff. Thank you, mate. Always glad to help. Well, when we have a level that basically it's the first time it traded. When you established this low, I presume you're talking about this. When we established this low, it's basically I would love to stick to the first test. That's why. As George said, I'm very conservative. George constantly redraws his retracements. For example, he would do he would see it the first time like this. I would consider this traded to the front run because I've seen the pound. I know the pound. It trades like this. It either trades like this or goes to the 61.8% line. George would normally redraw it. As we mentioned, it sticks perfectly at the 50. Doesn't matter which one you do. The one is front run of a pip probably. The other one is a perfect hold, basically a dip of a pip or 2. So to be honest, I would stick with the first test because as you can see, if you have if you played that in the first time, it's uncommon. This is basically we establish it on observation. You would be riskless right now for sure. Look at the way it basically traded from this level, and then you have the second test, which right now is getting participated on the long side, and you would be not riskless right now. That's why I would take the first anchor. Is that a convenient answer for you, or should I amplify? Okay, perfect deck. Let's move. You guys wanted to have a look at the Aussie dollar. Okay, Aussie dollar. Aussie dollar right now getting offered heavily. Just waiting for my chart to backfill. It's been terrible price action. I entered multiple times over here. I got stopped out at full. I took out a couple of full stop losses, which is uncommon for us. So what we had at first deck, because you were not, I haven't seen you in the room before. What we first had on observation is this level trade. So this was the first test of the Aussie when it made the longs free from this level. Unfortunately, if I remember correctly, we held all the way halfway back short at that point. Yep, perfectly to the 61.8% line. As you can see, we traded back down. We broke the this long, which we established on observation. So we said to ourselves, okay, so maybe Diago sabotaged themselves to this anchor. And what happened is basically they had, again, whoever traded this, they got participation. The longs were free. We had measured moves, micros, moving away from this support level. But we broke what is very uncommon. We broke the short. As you can see, we broke the short, and we failed the support below us. Me and George, actually George didn't participate over here. We participated on the first ambush long after we broke shorts. You draw up the full halfway back long from your support level with your low, which was this one, to this high. As you can see, the first time it traded, I couldn't participate because it was sleeping at that point. It was somewhere around 4 a.m. I normally don't trade at that time. I sleep. George's our midnight rider. So it made the longs free. Then a retest. You could argue that it made the longs again free if you hopped on perfectly. But then it plunged again. So the Aussie not looking good. If you have a look on a daily chart, this would be, actually let's have a look at on daily chart, because at this point we have to consider all options and see where this thing finds support, or if at all. Okay, what you would have on the Aussie, what I have on my daily graph, is a full halfway back, which is a bit awkward. As you can see, it traded 2 times over here. There was a retest. After that, from this support level, you would draw your next in the series support. As you can see, we traded this on 24th of December and 27th. That was late last year. And let me just, yep, it looks about right. Traded the first time. Amazing reaction of this level. However, failure to break out of the long setup, and right now when we haven't reached the target, what we have in our strategy is a retest of this level. Of course, the level that I was talking about that the Aussie failed is this one. We would expect this to, maybe to validate support over there. You would expect it. That would be on observation. You would have micro measured move longs moving away from this level somehow. But we didn't get that. We just plunged straight away. So a retest of the 10367 approximately is right now a fact. We will trade to that level. What am I seeing on the daily chart in the Aussie is maybe an extension short. We'll see when the candle closes properly. Yeah, actually it held perfectly. We'll have a look at a 1 hour graph. I'll show you where the entry was. I did not consider it myself because I was looking to the upside. However, the Aussie fell flat on its face, guys. Nothing as support over here. You would have an extension trade from this anchor probably to these lows. Yep, pretty much a hold, I would say. Aggressive extension. It's going to get offered heavily for sure. At this point, we don't know if it's going to keep extensions or it's going to go into traditionals. We'll see. We'll keep you posted. Have a look at the site. I'm going to have a proper look at it and maybe draw up a report. But for now, we seem to be holding this. This is not uncommon for the Aussie dollar. As you can see, it dipped just a bit in its 61.8% line. However, it's a good hold. It's a good hold. It's not uncommon for the Aussie to do this. The Aussie, when you trade it, it's a volatile pair. Always keep your stops 2-3 pips above or under the 61.8% line. Okay, is this clear, guys? Are there any questions? Well, obviously in the Aussie, we'll be looking to the downside. We'll find an entry somewhere, hop on the trend. We'll see, but it broke traditionals, at least 2 of them. So it's not out of the question to have a full halfway back short at this point. Any questions? Would you pull new anchor, new low? Where, Steve? Can you just outline where would I pull the same anchor, new low? New anchor to new low. Recent low in the Aussie. We're talking about the Aussie, right? Same anchor, new low in the Aussie. Yes, we would. This is basically established resistance point right now in the Aussie. So once we have reached the target and we have not blown through it, we would expect to have resistance at the 04533 unless we go. I told you the problem here is that we broke a few traditionals, 2 to be exact, so you could expect us maybe grinding a bit higher on an artificial bid, sort of a short squeeze. Have in mind that all the retailers right now, they're chasing this move. Also, a lot of people are getting stopped out on their longs, so it would not be uncommon for us to see a sharp move to the upside. This is basically what's going to be the fuel for us to get our entry. Okay, is the Aussie dollar pretty much clear, guys? I would presume so. Okay, Deck, thank you for confirmation. Okay, let's maybe talk about gold. Gold is something that I've been tracking. Parnab, I'm gonna explain why I didn't post you an entry yesterday for gold, because at one point the retracement got really funny, and it was a bit risky to enter over there. Okay, gold. What you're seeing is a 1-hour graph of gold. This is support level of gold which has been broken. We've discussed that previously. It's the way that we broke this was we traded from a halfway back short, drawn from the 1753s, 73 over here. You can see to this low, the 1635.40. Perfect hold of the 50%, making sure it's riskless and everything. However, not trading to its target. The reason why is that we broke a major support level in gold, the 1629. So immediately what happens, the shorts would take profit over here. That's what the algos do, and you would have a countermeasure move start. Preferably to a full halfway back, which in gold is right now 1711. Just a sec, guys. Just a sec, guys.
Please check the euro. Explain the vertical shoulders. That's about to get confirmation and maybe move loans. It's just now confirming
the euro Aussie. Okay, we'll finish up with gold a bit later. Let me just. George wants me to do something with the euro Aussie. I particularly don't like that pair, although it's very important right now. I don't know if George has emphasized this. Okay, we see a bunch of things being drawn up from George over here. I haven't opened up this in quite a long time. Let me just get rid of these things. Yeah, important to note in the Euro Aussie, the moment we broke this support line, basically was very clear that we're going to the upside. What I don't like is that our system wasn't too efficient over here. A lot of misholds, and after that, false breakouts. What George wanted me to outline is, if I heard correctly, an inverted head and shoulders on a daily graph. Okay, now stuff just got serious. Targets are above at the 1.4. It's being almost confirmed, as George says. We just gotta wait for my price graph to load. Let's see if the 4-hour loads a bit faster. Okay. Oh, I see it now. He's talking about the big one. What you would have is this, I presume, right, George? Like this? Like this? Okay. We're right now waiting for a test of basically a test of the neckline over here at the 126.5. This is classical technical analysis, guys. We use this to look at patterns. Yeah, on a daily chart, classical technical analysis works. And then we go to our strategy with Fibonacci's to confirm our strategy. So you would measure up the target of an HNS if you're not acquainted, like this. You would put it on the point of the break of the head and shoulders. So you can see our targets are above at the 1.39, 1.4 approximately. I'll just hand the microphone to George very fast. He just wants to fill you in on something.
Guys, the reason that I speak about head and shoulders is that much, especially inverted head and shoulders, is statistically speaking. And for those interested, I'm going to have this statistic uploaded. I'm doing my own statistics on inverted head and shoulders and so on. But Bukovsky, he's a very well-known pattern guy and so on. I use his statistic very often. Inverted head and shoulders are the most freaking reliable patterns out there. They are with the highest measured success. Not normal head and shoulders. It's inverted head and shoulders are the patterns with the largest probability of success. It is like, I think, 89% of all inverted head and shoulders is on a daily time frame. On the NICE turned out to be correct. I had to check the exact statistics, but it's something like that. So that is especially why I always talk about inverted head and shoulders. I weight them much more than I weight the normal head and shoulders, basically because the probability of them working out is much greater. And I guess you can attribute this to short squeezing and stuff like that, but it doesn't really matter. Okay, I'm handing you Alex back. I just wanted to make sure everybody is going to pull the Euro Aussie chart and start looking at it. This is our next big trade.
Yep, looks pretty good on the daily graph. To be honest, for those of you who are wondering what we're looking at, I'm just going to outline with the mouse. This is your first shoulder. This is your head. Second shoulder. We can even make an argument. This is a complex head and shoulders with two shoulders. This is what George was talking about. This guy Bukovsky. He has a site. You can check it out. Info is public. He has success rates of head and shoulders, inverted head and shoulders, and etc. All the classical technical analysis patterns. And just to mention, for subscribers, I am going to put out a reading list with the books that we have covered because we have not only been trading on this strategy. There's a lot to our strategy behind. Basically, in the kitchen, what you're seeing is just the product of a lot of analysis. We don't look only at 15-minute measured moves. We are going to put up a list of recommended readings for you guys. So yeah, this is what's going on the Euro Aussie. We can zoom in maybe on an hour graph, 1 hour, and have a look what's going on regarding Fibonacci's. Okay. So this is the first traditional that we held, as you can see, almost perfectly for such a big retracement. We didn't even dip into the 61.8% line. The problem is that from here things got a bit tricky. Again, a hold. You can see targets are reached, and this was the like, you go like this. You take this anchor, you drop to here. As you can see, we held again. At this point, we're going into an extension. Let me just zoom in because you guys can't see anything. Okay, so at this point we're expecting we would go into extensions. The normal extension we would consider is this anchor trading here, but as you can see it didn't hold. Let me just get rid of some of the retracements because it got a bit confusing. Okay, don't worry guys, you're gonna learn these things by heart if you trade our system, because you look at it all day long. What we would anticipate is this holding over here. The problem is it didn't. If I remember correctly, we were trading this extension from here. Yep, this is it. This is the anchor that we traded. This is the first time we held. Then we had a traditional within an extension again. This is what I don't like about these pairs. Oh, actually, here it was a front run of the extension, very big one. Didn't give entries, very clear. So you would have same anchor, new high. As you can see, it reached targets. But after that, something happened which we did not expect. Weakness in the euro. As you can see, what you would normally do in our strategy from here. Let me just get rid of this line. You would draw the full halfway back. At this point we were going like crazy. We were talking about, oh man, this is impossible. It's gonna give us an entry over here. As you can see, the first time it held, but did not make longs riskless. And from here, I don't remember. It held a short and broke the retracement. There, arguably, if we check another price data source. This thing held, but I have no idea. I will make sure George covers this. I don't want to go into it because I'm not very familiar with this instrument. It is a bit tricky. Right now we're trading extensions, and for sure we're gonna see serious upside. Because okay, George says we have an 88 wave triangle completed. He's gonna talk about that because I don't understand what he's talking about right now. I need to see the explanation. Yeah, just on a fundamental view, Aussie getting offered very low, nothing as support actually below us on the Aussie, and Euro getting serious bid. Let's go back to our gold chart. Okay. Again, what we had is a short trading from the 1753 to this low, held perfectly, broke support, came back for a retest because we did not reach the targets at the 1607. First time we saw that we were gonna move away from this level in a manner, was in a serious manner actually, if I have to be honest. This is a movement for 2 days. is from yesterday and today, is when we held the first halfway back short of our resistance level. It was the 1689. After that, you would take this anchor. We posted this entry into the trend for gold, a 1683. And right now, it's very debatable what we're holding because as shorts, because the retracement got funny. At the 1683, you would normally drag like this. It held, it gave an entry, but the problem is that the level did not get respected properly. Actually, it did, but there's something funny about this move, guys. It's gold will normally make a retracement. Either it's getting offered really aggressively right now, and as you can see, when we reached target, we weren't able even to get to the 1674, which would be your entry into the short. I don't know. Have in mind that right now we have a traditional measured move 1625 to highs to the 1697, which is supposed to be some support for us. Although the big short has traded first, so we do not limit order this. We would not expect it to hold. As a matter of fact, right now the short is to target. So the moment we have some clarity, I promise you guys, I will look into give you an entry. We'll see how it's gonna develop. I hope it doesn't plummet into extensions, because then we're not gonna have a chance to go in. Guys, any questions regarding this gold chart? It's pretty straightforward, very easy. I got left out. I couldn't enter the 1683 because I was typing up the morning webinar on Wednesday, if I'm not mistaken. Or no, actually yesterday. Yeah, yesterday. Guys, any questions? Come on. I cannot be explaining this so thoroughly so everyone doesn't have any questions. Yeah, what I just heard in my ears is the market bell. Okay, guys, do you have any questions, or should I go ahead and talk about something which basically the SPX? Yesterday I downloaded the TOS software, Thinkorswim, so we can have a better look at it, or because I don't see anything else that would be interesting to cover right now. Gold getting offered, no support over here, no participation. Algos, I think, are disregarding this level. If the funds don't see any type of support over here, they're gonna all float heavy. My personal opinion is that the 1629 is gonna be no support also, because it's been broken. We'll see. Gold is a kind of a volatile instrument, so you should be careful. What charting software do you guys use? Well, George uses Trading Station, which is FXCM's platform. I have traded also on it in the beginning. It's a pretty sweet package. My broker, because I changed brokers, I'm using Multicharts. I should say it's a reliable software. Support is pretty good. Charting is pretty awesome. I don't know if you can see it on the webinar. Of course, there are some other charting packages out there which are pretty amazing. One of them is Motive Wave for those guys that use Elliott waves and Gartley patterns. George said that we might purchase it in the future so we can properly explain the Gartleys and the Elliott waves. What I like as charting for myself is multi charts or another charting software, which I love is this one. This is Thinkorswim. This is they've been bought up by TD Ameritrade. For all of you Americans, it's available. For the Europeans, I'm not so sure. What I am sure is that it's not offered in Bulgaria. Um, However, the guys at Thinkorswim are so generous, and they let us use the platform with paper money. I should thank them. Um, okay, so what we've been talking about, this leads us into our next topic. This is a 10-year daily chart of the SPX, S&P 500. What we talked about yesterday in the S&P, and I'm explaining this on TOS, abbreviation for Thinkorswim, is because it has extensive price data and trading is pretty amazing. Okay, so what we have had since 2008, the low at this 666, as you can see, 79. This is what we have as price data. The origination of all our retracements and basically the whole upside in the S&P is from an anchor of the 868 to this high. This is the first 50% traditional retracement that we have had and has gone to target. This was in early to middle of 2009. This you guys, for whoever trades the S&P, should know this by heart. It's explained by a lot of people out there, but I'm gonna go take you through it. This is the first 50% retracement that we held and went to target. It tried going into extensions, but it failed. So what you would do is take this anchor again and draw up the next high. As you can see, this is the point. I don't know if you remember this August, if I'm not mistaken. It was a massive sell-off. This is one of the first big payouts that I had as a trader, far away from trading the system. After that, we got burned, but that was a long time ago. And as you can see, what we held, and for those of you that have been trading more as a time frame, I mean, I don't know if you remember this terrible price action in the summer of 2010. This was just crazy price action. Some argue that it's a diamond formation. I don't know about that. We held a 50% retracement, which has gone also to target right now. For those fundamentalists, this is where QE at Jackson Hole, Wyoming, was introduced. This thing over here. It was a massive short squeeze, which happened in a matter of minutes. This bottom candle over here, I don't know if you can see it properly. Yeah, so what am I saying right now is that basically we have reached the target of this perfect hold, almost perfect hold at 1119. And right now there's not much for us but going into extensions on the S&P, and we should look to keep those extensions, at least the guys that are bullish and have bought the S&Ps at highs. Keep it up in extensions. It's with the Fed doing so much quantitative easing, it would not be a surprise to us if S&P just continues in this awkward manner to drive up. There's plenty of room. to the upside. Um, oh yeah, George just mentioned that you can have a look at the chart of S&P that we've put on the site. So they're everywhere over there. Everything is outlined. But pretty much this is the macro picture on the S&P. You would the moment we get a break of any of the longs over here, which we've been holding. Let me see if I can zoom in. You'll have to excuse me, I'm not very acquainted with the software. I downloaded it yesterday so you can guys have a look at. This is where we are right now in the S&P. This is a retracement, a 50% retracement that we held and went to target and through. It's a result of another retracement, if I'm not mistaken, which many argue that has been broken, although we had a very aggressive move away from it. Yeah, so we have targets of the S&P above us at the 1523 for now, if we consider this a hold. We had measured moves, traditionals, walking away from it with a perfect hold. Right now, if I'm not mistaken, we're within an extension long. We were in an extension long, drawn from a very awkward anchor. I have to look for it right now. You excuse me, I'm not very acquainted with the most recent price action of S&P because I have been staying away from there. The thing is untradeable on a 15-minute graph. There are a lot of gaps. Gap players are right now, they're hitting it pretty hard. They're rocking it really hard. Gaps are amazing. They're getting filled almost every day. Price action is terrible regarding our strategy. A lot of people are getting caught up at highs. A lot of retailers are buying these highs. I would not be one of them. I'm not saying the S&P is going down. I'm not saying the S&P is going up. I just don't want to participate as a long on such a level. If we continue dragging up, we'll have extensions. If the first moment we break the extensions and we have significant downside, there's nothing as a valid support level for us. Imagine right now that we drop. The Fed says that they're satisfied with the economy in the U.S. They stop printing, they stop Operation Twist, or they minimize it. What we have below us on the S&P, the level of support that we would have right now, or if we take, for instance, the previous this high is an 1171. You would look for such a support level. Basically, you would drag this anchor to new highs, and that's what you're gonna pretty much have. The moment extensions fail, the level of support is 1171. Okay, guys, I've been talking a bit too much regarding this thing. It's a view of some of the guys that trade our strategy over there. Just have it in mind. Don't be aggressive with your buys in the S&P. I would advise you to use a tight stop loss, scalp it, gap fill it if you want. For those of you who use futures and do such things, I'm not one of you guys. There's a lot more interesting price action in currencies right now. As you know, the currency wars are on. This has been emphasized a lot in our analysis. SNB is doing, Swiss National Bank is doing easing, BOJ are doing the easing. Basically they have accompanied the BOV, Bank of England, easing, which has been since 2008. Asset purchases have been a fact over there, and of course, the Fed, which are the main player in this game. They first introduced this game to us. What George is saying is we're seeing a break of shorts in the dollar Swiss. It's trying. We still haven't broken them. Ah, sorry guys, Euro CHF, the Euro franc. We're seeing a break of shorts. It's trying. The move over there is going to be I don't know how to explain it. It's going to be crazy. That's the only thing I can say. If the Swiss National Banks decides to go into um, printing mode, or actually, should I say intervention? It's going to be crazy. Yeah, the move is going to be crazy. The franc is going to be offered against every major pair that it's trading with. What George wants me to mention is that we're considering a long position, short, tactical short of the franc versus the yen. Yeah, he's gonna fill you on the details on that one. To be honest, I don't want to go into that. I don't like talking about things that I haven't looked at, that I haven't analyzed. I'm just gonna very quickly switch screens with him. Actually, before I do that, I just want to talk a bit about our subscription, about our site. As you know, this info is not going to be free forever. We got to make a living somehow, besides trading. Okay, so this is basically the main page of our site. As you can see, there are 7 days until the trial period ends. Basically, that's the 1st of February. The site we've put a lot of work into it. What I want to say is that the quantity of information that we're offering on the site for $60 for 3 months is just ridiculously low. The price is just ridiculously low. The information is tons. We have plenty of things that we guys can teach you. We have to say the least, a solid background in trading now. We've read a lot of materials. We have a lot of real life experience. We have a lot of things to show to people. We have been basically schooled by by very serious traders out there. Serious professionals which know what they're doing. Right now, let's just go and have a look at the site. Right now, for the next 7 days, the username is test, password is test123. You click on login. Okay, and you get these 3 things over here. Of course, you can view the non-paid subscriber. You can view what we're doing, business, about us. Our performance is also over here. We're gonna upload all the webinars on the site. Okay, so when you click on charts, you get these sweet reports which come out at various times. We constantly update everything we have when there's a major change regarding our strategy, not in a trading manner, but regarding the pairs that we trade. You can see Euro, Pound, Aussie, Kiwi, pretty much everything is over here. We're gonna work on commodities and also the SPX. It's something that I'm passionate about, the S&P. I love trading the S&P. It's something amazing. I'm just right now I'm out of it because it's untradeable. Let's hope this is fixed, because I would hate it if I cannot trade the S&P. Okay, so when you click on hourly charts, so you basically get all the hourly updates that we have done. Daily charts, these are the charts regarding the Euro USD. Of course, there's going to be a lot more info over here. Other pairs, Aussie dollar right now. This is an analysis that George has done, as you can guys see. I don't know, is it coming out pretty? Yeah, it looks good on your screen. You can guys see weekly charts, etc. If you click on reports, you can have a look at our evening and morning briefings. Morning briefing comes out at approximately 8:30 to 9:30 GMT, basically London time. Also, the evening briefing is a bit floating, but comes out at about what is it? 12 GMT. By 12 GMT comes out. Yeah, on Fridays we're a bit loose with the hour of the evening briefing because it's pretty irrelevant. On Saturdays we type up our weekly recap. I'll talk about that in a bit. These are the past 4 days of briefings. If you want to have a look at something, you can go back and review entries that we gave. If I'm not mistaken, Euro JPY entry is somewhere in these briefings, and also the gold short, other profitable trades that we've had, the euro dollar entry. We've been doing pretty good in the last 2 weeks, to be honest. We've had some good performance. This is a place where you will be able to see the webinars. Last 4 days webinars, they're being recorded. Just click play, it comes out, whole screen it. You can listen to the things that we have said and outlined in our analysis. If you click on reports, on the bottom hand of the page, you can see the weekly recap. It's going to be pretty much every week. It's going to be during the weekend. Depends. We'll see. Whoever is free is going to type it up. Over here, you see analysis. These are special reports of things that we have seen in different pairs. Different analysis. This is the currency report. As you can see, Simeon has made sure that you can properly know which one is what. Last night, on a request of one of our, I don't think he's a subscriber yet, but one of our Twitter followers, we made a special report on the Nikkei. I think the guy was pretty satisfied with what we had to say. I even gave him an entry at the moment when I was typing up the report. If he was online, he would have had, I think, a perfect entry. On education, when you click, you have several things to look at. It's introduction to harmonic trading, which is Gartley patterns, trading rules, which involves how you should handle your resources and money on your account within the halfway back strategy. Also hedging, equity curve, and drawdowns. This is something which you should do very often. You should update your performance, if possible, even on a daily basis. But you can have a look at the trading rules and everything over there. The stats right now is not active because we haven't done a lot of statistical analysis. Although in the future we are going to introduce a bit of statistical analysis, which have to do with correlation, seasonal trading, which is something which we are strong proponents of, of the seasonal trading. Seasonality is something very important. We're going to start working on this the moment that Simeon finishes with the site, because he's the person responsible for mathematical calculations in the office. Yeah, that's pretty much, no, it's not pretty much all of it. Over here, you're going to have our trades where we entered, how they played out, and it's going to basically a video of it. This is through a site called TradingView. Maybe some of you guys are familiar with it. It's a pretty sweet thing. We will update the last positions that we think are pretty good, or some of them are when we entered. We're just going to post the entry over here. And if you click on performance, pretty self-explanatory. I don't think I gotta walk you through this. This is our equity curve. Most recent positions, pips netted. This has to be fixed. This is a lot bigger. Yeah, so that's pretty much it for the site. Sign up. Pretty straightforward, guys. This is what you get. Right now, until the 7th of February, there's a promotional pack. You get us for $60 for 3 months. Basically, you get April free if you sign up for this particular um, subscription. From basically any month until April, single month after February is going to be available for $30. And after that, the normal subscriptions kick in. From May 1st, the single month subscription is going to be $50. We think we're worth it. And then you can have a 3-month subscription. If you pay it, which will be $90, basically you get a 40% discount. So for example, if you pay in March a 3-month subscription, you get May for $30. That's the gig. Basically any month for $30. Okay, that's pretty much what I wanted to talk about. I'm gonna just quickly give you George. He wants to talk about your CHF, if I'm not mistaken, or CHF JPY. Yep. Okay, guys, thank you for listening. I hope this was helpful. George, it's you, man.
Okay, guys, I hope everybody can hear me. I want to cover this now. This is like a long way from actually getting anywhere, but I know a lot of people want to go long the yen, right? And I mean, it makes perfectly good sense. Anybody with a sensible mind, when they see this yen rally, would immediately want to try to go long the yen. However, you have to pick your battles. You have to pick your battles. You have to figure what is the best way. Now, we have broken in the Swiss yen. We have broken the opposing measured move short. We have something that could potentially be considered a triple bottom or something like that. However, the way that I view this is a bit different. By the way, I think this is a halfway back long that we are holding. Yes, should be something like that. I think this is a range, and what I would say is if I really want to have exposure to being long the yen, it would most certainly be in the Swiss yen cross, because I anticipate that SNB is eventually going to have to do something, and when they do that something, it is going to be major. Also, I do think that this rally at this point is overextended. Now, what I think we are seeing here, I have to double check this, but this looks like a bearish shark. This bearish shark obviously is going to become a bullish 5-0 Gartley pattern. But now the entry level is the 88.8. Yeah, this should be this certainly is a shark. I mean, I can't see it 100% right now. I'm going to do the flips now, but this really looks like a shark, a bearish shark. Now, okay, first one by one, let's go with things the way they're supposed to. Now, the entry level is the 88.0, 88.6, so we still have a bit more upside. So the 105s, that's like almost 1,000 pips higher before we have a valid short entry in the shark. Then we have to check this, if I'm right. 1.13. Well, almost right. I mean, one cannot strive for perfection all the time, like you're not gonna, especially in such large time frames. It's not that often that you will see like perfect pattern playouts. I just want to check something because potentially this could, yeah. Yeah, so we still have some sort of upside in front of us. That's for certain. This is obviously not the most perfect you can get, like Gartley pattern, but it is a decent enough shark in my opinion. Now, why is it not perfect? It is because we didn't test this level below us, you know, by a few hundred pips. But the range is so huge that I think the chances are fairly good that this shark will eventually play out. Now, this shark should start looking something like that. That is what we would expect for this shark, and this shark will then give us all the way halfway back long. This is a bullish, it becomes a so-called emerging bullish 5-0, and then upside. Now, I just outlined two trades in one pair because this is how sharks work. Now, we have broken all the way halfway back short, so when you break all the way halfway back short, that usually means that you would pull all the way halfway back long. So, because we know that we are going to anticipate this halfway back long, what I'm going to start looking at, again, I'm saying this is a tactical move. This is a tactical dollar Swiss yen short. I'm looking to start failing a series of extension longs on the micro time frame. When I see the real big series, like a real important series fail, this is when I'm going to start looking to get short the Swiss yen. Now again, the reasoning behind this trade, and that is what I keep telling people that are new to trading or maybe have struggled with finding the best trades. You have to always look for the best trades. Now we know that the yen rally, is overextended. That's like obvious. I mean, you have to, regardless of how you look at it. I mean, yeah, sure, we have a lot more upside, but we have yet to see a full halfway back long trade, right? We have yet to see a big correction occur. So when we see the sign that such correction is under the way, I believe that the best opportunity will be in the Swiss yen, because you know, like, things usually tend to align in such a manner that when the Swiss yen starts going down, it would probably happen when the yen starts to strengthen. You know, S&B is probably going to take action when BOJ is done. I keep on telling this. I've mentioned it a couple of times. I do not think the chain of events that have led to this BOJ easing is a coincidence. Like, in my opinion, they have been waiting for the Fed to start running out of bullets, and in my opinion, they kind of have. And when the Fed ran out of bullets, they started doing their own easing, you know, without actually uh, that being hampered by the Fed. So I think S&B is the next on the move, and S&B is probably going to move when the BOJ is done. That is the way I view things. We can certainly see some sort of intervention at the moment. If you have been checking, you will notice that there is a bit of a correlation going on now, which is rather interesting, between the franc and the yen. It is starting to become an inverted correlation, and that is quite interesting because these things used to move together. And there are some changes. I'm finding that when the yen, or at least I'm noticing that when the yen is not moving, is usually when the franc starts getting sold. And when the yen gets so sharply, people start buying francs a lot. So I'm just looking at these things. I'm looking for signs. You know, I think that this would be perhaps one of the best one of the best yen wongs. Mostly, again, from a fundamental perspective. That's why I'm saying this is a tactical trade. At this point, there are not many things which you can identify as a reasonable entry level or whatever. The only reasonable entry level is like 1,000 pips above us. So we need to wait for a break of micro wongs, and before we break the micro wongs, we cannot validate anything, you know, like to go short. However, and I'm going to say this. This is the bearish shark we are looking at. If the yen continues, actually it's not 1,000 pips, it's only 500 pips higher. So if this continues moving the way it is moving, we could get this bearish shark relatively soon. This is the only level I would take without awaiting confirmation. The only level I would take. Zoltan, I'm not sure that is such a good idea. But and this is still under development, keep in mind. So we have to see. Again, particularly the reason I like it is because this is a shark, and as I said, sharks are emerging 5-0 patterns. What it means, emerging 5-0 patterns. This is perhaps the one pattern that is 100% same as in the halfway back system. You just bait a half, you just take the halfway back long, and the 88.6 line you can see would align almost perfectly with a halfway back long in the Swiss yen. So I'm just saying, you know, like things like that, they are usually not a coincidence. They usually have a very good reason to occur the way that they occur. I have noticed this pattern for a while. I've been looking at it. It's not 100% perfect, but in real market conditions, you often do not get things that are 100% perfect. All I do know is that when I want to get long the yen, this is what I'm going to be looking at. And the level is 500 pips above us, and it's going to end up in an emerging 5-0 pattern that is bullish and will have targets at new highs. So that's pretty much what I wanted to cover regarding the Swiss yen. We're still way below the level where we can take safely with a tight stop loss, which is 500 pips above us. But eventually it will come. Now, about the bet home sales print, keep an eye on the Dow yen. It is going to tell us what is going to happen. Now, this is all I wanted to say. I'm going to do a report on the Swiss yen. Maybe this weekend, maybe over next week. I'm going probably to reduce my trading quite a bit now because we have booked around 3,000 pips this month, which is ridiculously much. That is, of course, gross, not net. Man, I wish that was net. This is gross 3,000 pips, so that is just like net. That is unit size multiplied by average cost basis of net pips booked. So you know that is like maybe 1,000 pips at most net. Anyways, yes, that's what I was saying. I just want to protect my profits. What I have found, and how I knew this huge triangle was coming is for anyone that followed me back then on this rally. I said, okay, we had an really easy move. It was a crystal clear move to the upside, really easy. I said we are going to have at least 1-2 weeks of pain. That's what I said on Twitter. So. Usually that's what happens every time, so I wouldn't get too excited just yet. Okay guys, that was everything from me. Thank you very much for attending. If you have any questions, feel free to ask me now, or we shall conclude the webinar in 2 minutes. Ами не знам, ти излезе ли от вебинара? Значи се рекордва. Okay guys, seems like the way I see it, I think that nobody has a question. Yeah, we live in Bulgaria. We have all graduated in the United Kingdom. I hold a bachelor's degree in finance, and I have a minor in economics. Also have a master's in investment analysis. Alexander has a bachelor's in finance and a minor in economics. And our tech guy, who is also a financial guy, he has a bachelor's in applied mathematics and a master's in financial engineering. So we have moved back to Bulgaria upon graduation. I have graduated Richmond and Aston University, Alexander Richmond, and Simeon Sophia University and Durham University in Durham. How is Bulgaria doing? Bulgaria is not doing so good. I mean, much better than the rest of Europe, to be quite frank. from the point of perspective that we are so poor that we cannot get poorer, so it doesn't make much of a difference for most Bulgarians what happens. On the bright side, now the Greek are as poor as us, so we don't feel so bad about ourselves. That is just a bad taste for a joke, but. To be quite frank, I'm very happy with Bulgaria. We're seeing major improvements, but the only problem is that these improvements are only in the big cities, only in Sofia, only in Varna, only in Burgas, so only in Plovdiv. So it's becoming a very fragmented country, which is not very good, but generally doing relatively well. Business is okay. We have some economic growth. We have no debt at all. We have a freaking balanced budget, unlike every other country in the world. So that actually matters. So I think that matters, or it will matter eventually. Shit, that sucks. Wait, are you from Hungary or from Poland? Are you from Hungary? Well, Hungary, such a beautiful. Yeah, Poland is doing very well. Hungary is such a beautiful place. I always say that Budapest is perhaps the only city I think is more beautiful than Paris. I don't know why. I love the city. I love the city, excluding for the graffiti and so on. Uh, it is a very great country. It is with its a great history, and I know that you guys have a very bad economic situation over there, which is a real pity because you're doing so freaking well as well. I don't know what happened. I don't know what happened. You were doing so well. We were doing so bad, and now we're a bit bad, a bit better than the most. Yeah, populism doesn't work. For those of you who don't know, I'm a big believer in austerity, and I think that what America is doing, like capitalisms and so on, like I think that is what is leading to their demise. Don't take me wrong, I'm not a socialist, I'm not a communist or whatever. I just think there should be a thing like too much, and I think that certainly people should be looked after. However, I do think that the pension system should be demolished, healthcare should be demolished, and all those things. Anyways, I have very interesting beliefs when it comes to those things. So perhaps if we meet each other one day, we can discuss those over a beer. Alexander, please stop recording while I'm talking about this stuff. I don't want everybody to listen to my stuff. Okay. Yeah, I'm a screwed up guy.